Welcome back, everybody. It is Tuesday, September 30th, not Friday like I normally do. Um, this is going to be kind of the month end, September month end recap combined with the new strategy that I'm going to put into place that I teased in my last video. So, I had mentioned last Friday in my video that I wanted to potentially try a new strategy or just change up the strategy a little bit. And I did nothing but think about it all weekend and kind of work up the courage to do it. And I've decided to pull the trigger and go forward with it. So I will go over that in this video. First, I wanted to go over just the monthly stuff for September real quick and close out the month of September and then get into the change. So I'll jump right into it. I'm obviously not going to go over the strategy for new viewers because I'm going to go over that in a minute and it's going to change. So, first of all, I reported last Friday, so all of this stuff has pretty much been covered. I will go over what has been closed out though. So you can see I had a put on Starbucks that I bought back for $1. I have puts in place right now, a lot of puts in place. Nothing has been closed. So from everything that I reported last week, these are all still currently open. It's very rare that things would close on a Tuesday unless there's a lot of movement, but there hasn't really been. So nothing really to report on that. I will report back on these on Friday when I do my weekly recap for this week. But I did have my margin interest hit today. So that was $115.17 this month that I paid on margin for the balance that I currently owe. And then I received my Pepsi dividend. I currently own 107 shares, I believe it is, that I only received the dividend for on 7 of those because I did not own the 100 yet. I got assigned on those a week or two ago. Did not own them in time for the ex-dividend date, so I didn't receive the dividend for that amount, but I did receive a small dividend for Pepsi today. So not too much going on yet this week. It's only Tuesday. Jumping into September here. So I deposited $6,000 as I typically did up until this point, as you can see. So I've invested $6,000 of my income into the account. The current market value of my account sits right now at $98,498. And my margin balance, I actually transferred the $6,000 out today so that it hits my account tomorrow so that I can pay mortgage and student loans with it. And because I pulled that out, when I did, it was right around 10,000, or actually it would be 10,128. The Pepsi dividend and the interest hits, which adjusted it a little bit. So I pulled the 6,000 and it brings the balance up to right now $6,128. So for the options and dividends for the month, as you saw back here, total income of $2,583.52 this month. Options were quite a bit lower than the previous month, $1,160.42. The reason for that is there was one less Friday this month, which I typically trade options on Fridays. I was assigned on 100 shares of Pepsi, and I was assigned on 100 shares of Starbucks, which took away some of my buying power, so to speak, for options trading. It wiped out a good chunk of that, about $22,000 or so. So I'm working on replenishing that, as I've mentioned before. That number will come back up as I do so. And with the new strategy that I'm going to go over here in a minute, that should come up a lot quicker. Dividends, I still received $1,538.27. Misty did not pay out as much. I think it was actually its lowest payment, I think ever, maybe. So still, $1,538 is not bad. And then $115 I had to pay, like I said, for the margin interest brings the total $25.83. So quite a bit less than last month, as you can see. But I had mentioned last month that it would be. What is noticeable, though, is from June and July, it's quite a bit less as well. And you can see I always put the options first and the dividends. So options was down about 500 from July, if I compare it to that. And it was actually down 700 or so from June. So bad news there. But like I said, I was assigned on 100 shares of 2 stocks, which I was okay with being assigned. So that number will come back up. As far as dividends, though, you can see 1538 I got this month compared to 1558 in July and 1444. So dividends are still right in line there. So once I am able to contribute more money and put more into options trading, that options number will come back up and this number will go up as well. So like I said, $115 in margin interest this month. Also, I should note the Fed cut rates by 0.25%. So that dropped my margin interest percentage to 9.25. When I first started this in June, my margin interest was the amount that I was charged was 12.535%. I negotiated it down to 9.5, or I should say it was 5% plus whatever the federal funds rate was. So as the Fed cuts rates, my rate is going to drop more. So right now it sits currently at 9.25%. So that was on, the 115 was on between 14 and, well, between 12 and 10 roughly. So not bad. So all in all, if you think about it, I've paid $316 in the last 4 months in margin interest, but I've been able to deposit $24,000 into the account. And this is going to go hand in hand with the new strategy I'm going to present here in a minute, as to why I really like this and I want to speed this up. I also added a tab here for equity percentage, because, tease it again, the new strategy coming. As I am doing this new strategy and executing it, the equity percentage is going to become more important. It hasn't been as important up to this point, but I'm going to have to actually keep an eye on it now. Right now it sits at 84% of my total portfolio. I want to keep that above 60. Some people do 50. I just want to do 60 to be just a tad bit safer. So I never want to let this dip below 60%. And then percentage goal to my goal is 43%. This is always going to fluctuate. I eventually will take an average of this, and hopefully the average is creeping up over every like 6 months or 3 months. I'll decide how I want to do it once we get, a few more months in here. So lastly, I just wanted to cover the high yield dividends so far. For the month of September, JEPI, I received a total of $30.20. And you can see the totals over here. I won't go over each one, but you can kind of read those as I go through this. And then you can see SPYI in September paid $52.70. GPIX paid $10.48. XDTE, I received $374.73, quite a bit less than last month and the previous month, so hopefully that comes back up. MSTY, as I mentioned, been quite a bit less as well, besides here, which is why I only had a few shares, but $572 this month. YMAX also dipped, so everything kind of dipped a little bit this month. Even though my dividends remained mostly the same in income-wise, I bought more shares, so it's not as good as it looks this month, so hopefully October is a little better. ULTY received $3.25, a tad bit less than August, not bad, but it's still been maintaining that 9 to 10 cent range every week, and I've also stopped contributing to ULT for now, so not bad as long as it stays in that area. And then WPAY I've been very happy with. They just announced they're going to pay, it's going to pay tomorrow, it's going to pay 88 cents per share, which is a lot. Previously it was around 50 something the last 2 times, so that's a nice payout. We'll see if it continues. And then real quickly, I wanted to go through where I'm at on total return on these. So MSTY, I've currently received 46.88% of my money back in total. Total return down though, a little less than 1%, down about $100. And that's because it's just dropped a lot in price recently. Not too worried about it. I'm just going to continue to hold it, not adding much to it or anything to it at this time. ULT, and I should mention I got 545 shares. These shares I actually need to update as well. But ULT currently has paid me back 20.56%, or a total return of 8.22%. YMAX has paid me back total 18.65% of my money. I am up 12.64 in total on it. This does not account for taxes. I'm not really considering taxes at the moment. XDTE paid me back 10% of my money so far, and I'm up 12.04% on it in total return. SPYI payback 5.57, total return 11.78, and I'll let you guys just read through the rest of these. This JEPI is creeping up a little bit too, which is nice because I was down on it for a while. So total, I've been paid back 20% all the money that I've put into these higher yielding funds, and my total return, I'm up 7%. So I'm pretty happy with that as far as receiving the dividends and everything like that. And the longer I hold these, the better that number will get. So wanted to quickly run through that. Now I want to shift over to what I'm going to do going forward. So I just quickly laid out what the previous strategy was here. So the previous objective was to increase the velocity of the brokerage account to hit financial freedom faster. That remains the same. That's always going to be the goal of this, right? Is to create financial freedom. How? Use the money that would normally go towards debt and invest it instead. I would use margin to pay debts when they're due. So wrapping up this month, I withdrew $6,000 today to hit my account tomorrow to pay my mortgage and my student loans. So deposit $6,000 per month into the brokerage account, split into how many Fridays there are in the month. 50% goes into SGOV as a holding and used for options trading. 50% used for high yield assets. And then a couple of days before the first, like I just mentioned, transfer the money out to pay the debts. And then any income earned from options and trading or dividends is used to pay down the balance of the margin throughout the month. So the new objective is the same, but I just phrased it a little bit differently here. Dividends, options income, and capital gains. If I, say I want to buy a share of something or a few shares of something when I think it's underpriced and then sell it later, that's capital gains. That's going to go towards monthly expenses as well. So the difference here is instead of using the money to pay down margin, which it's technically going to be start paying all of my monthly expenses. So instead of just paying my mortgage and my student loans now with margin, I'm going to be paying all of my bills or almost all of my bills with margin. The only ones I'm not going to pay are things like cash. Like I have a car wash membership for like $25 a month that would charge me extra to use a credit card. That just doesn't make sense. Why would I pay more to use a credit card? It's like 5% fee or something silly. I'm not going to pay more to use a credit card. So I just have it come out of my debit card and my checking account. So for things like that, which is just maybe a couple $100s a month, I'm going to leave those alone. I'm not going to worry about those. For everything else that I spend or that I use for expenses, I use credit cards. I use different credit cards. I never carry a balance. I haven't carried a balance in years. I always pay them off at the end of each month or when they're due during the month. And then I just get the rewards, whether it be a hotel card, whether it be 3% back on dining or Costco, whatever it might be. I use those to use that as like income kind of, or use it towards things to take us out to dinner or something like that. So break it down. All of my expenses are mostly on credit cards, like 90 to 95% of them. Those are now going to be covered by my account. So first it's going to be technically the dividends that are going to pay it, but it's actually going to be the margin. So all of my income throughout the month, every bit of the income, minus the cash like I just mentioned, is going to go straight into my brokerage account and be invested into the same way here, 50% into SGOV and 50% into high yield ETFs. So this is going to grow the account much faster. It's also going to help keep the equity percentage higher. It's also going to raise the margin balance, right? So I'm going to invest all the income into the brokerage account rather than pay my bills with it. So normally you get your income from whatever it might be. You pay your rent, you pay your phone bill, you pay your car, you pay for gas, food, whatever it might be. From now on, starting this Friday, my money, any income that I have, whether it be from W-2 jobs, whether it be from some side gigs that I'm doing, whatever it might be, I'm going to take that money and put it straight into my brokerage account and invest it and split it like I have been. And then when bills come due, credit card payments, car loans, which I don't have one at the moment, but anything, I'm going to pull the money from the brokerage account. It's going to be on margin at first because obviously I don't have enough dividends right now and income to cover all of my expenses. I'm trying to get there faster. That's the point of all this. I'm going to pull that money. So say I owe $500 on a credit card that's due tomorrow. I would pull that $500 today from the account. I want to do it as close to when it's due as possible, so I'm not paying interest on that, and then pay that bill with it. So step one in this is immediately invest deposits into high yield assets or use for options trading. Like I mentioned, 50-50 split is the target, just like before. So it's the same regard there. Step two, income generated, like I mentioned, pays down the margin balance, and it ends up paying it down quicker as the income grows. Because I'm going to be putting quite a bit more money from income into this account, the income is going to grow faster as well. So while the margin balance is going to grow, the income should grow faster, and it will grow faster because I'm paying 9.25% on my margin balance. I'm seeking a 20 to 30% yield. So if I'm even getting 20%, I'm still getting 10% higher than what my margin interest is. So I'm going twice the speed, right? My income should be going twice the speed at least as my margin balance. So eventually what's going to happen is the income is going to cover my monthly expenses and working is going to become optional. Eventually, and I predict sometime in the next like 3 to 5 years, the income that I'm receiving from option trading, from dividend payments, from capital gains, whatever it might be within the account, is going to be more than what my monthly expenses are. At that point, I could choose to quit or work part time, whatever I want to do, and use the money that the portfolio is generating to pay all of my bills, and then work is optional, as it's referred to a lot of times, financial independence, retire early. That's what I'm shooting for. um, all of the bills, everything will be withdrawn from the account to pay for those. So long story short, in addition to mortgage and student loans, I will now be investing almost all of my income to the account, and I will be paying almost all of my bills with margin from the portfolio. So you might be thinking right off the bat, well, what about the equity percentage if you don't want to have it go below 60%? Because I'm depositing quite a bit more money because I'm going with almost all my income into the account, that raises the equity percentage. So that percentage should stay pretty high. Obviously, if there's market dips and things like that, I will adjust as needed. But I'm not really counting on that happening. Um, and I have some ideas in place for if it does. So I don't want this to run too long, but I wanted to quickly go over what I'm going to be doing going forward. This Friday will be a little bit different, obviously, because it's not going to just be the normal 6,000 that I'm putting in or 6,000 that I'm pulling out. It's going to be different. So as always, though, when I deposit money, I will show what I'm investing it in, what I'm using it for, and so on and so forth. Hopefully I explained this kind of well and it makes a little bit of sense. If it doesn't, let me know. I'd be happy to explain a little bit more. But until then, I don't want to take up the rest of everybody's evening, and I will see you guys on the next video.